Happy New Year and welcome back. I'm Jeb Smith, real estate broker with RE/MAX TerraSol here in Huntington Beach with your Southern California real estate market report for January 2016. With a new year comes change. So with that being said, I'm going to change my monthly report to focus more on what I see for the coming year, as not a lot has changed since last month, and then my February update will get back to talking about the current housing market. For those of you interested in the actual market statistics, I'm providing a link below. As most of you know, we are just coming out of the slowest season for Orange County real estate. But I'm expecting great things for our local housing market as we progress into the new year. I expect 2016 to be pretty similar to 2015 with one exception, and that's interest rates, which we'll talk about in a little more detail in just a few. As we move into the spring market, I expect inventory levels to start to increase from their yearly lows in December, which should continue to rise through the end of the summer selling season. Although I do expect an increase in homes for sale, I don't see a huge change from last year and expect the inventory levels to remain pretty anemic, with buyer demand remaining very strong, keeping inventory at historically low levels. Buyer demand has been a big driver for the past few years, and I expect that trend to continue at least until the Fed starts really raising the Fed funds rate, which could happen about halfway through the year. Until then, I expect buyers to continue to cash in on historically low interest rates, which will ultimately create more demand, causing us to experience a very strong spring market, as well as another 3 to 4% rise in appreciation. As the Fed starts to raise rates, I do expect the demand to subside a bit until the market becomes a little more balanced. Interest rates are the big factor in how 2016 will play out, in my opinion. Most experts are expecting the Fed to continue raising rates between 0.5 and 0.75% for the year of 2016. While I do expect the Fed to continue raising the Fed funds rate, most don't understand what that really means. It's important to keep in mind that long-term interest rates like the 30-year fixed are not immediately affected by changes in the Fed funds rate, but as the Fed continues to raise the Fed funds rate, it will directly have an impact on our local housing market. What should you expect as a buyer or seller in 2016? Sellers are really going to have the advantage as long as buyer demand continues to outpace our increase in inventory. And I expect this trend to continue through the first half of the year. As the Fed starts raising rates, I expect that buyer demand will slow, which will cause our inventory levels to start increasing and causing our market to stabilize as buyers and sellers become more in line. As you know, all real estate is local. So if you are a buyer, seller, or investor in today's market and you have questions, I would love the opportunity to help guide you in the right direction. If you would like more information about me, please go to my website, jebsmith.net, or check out my other videos on YouTube. As always, I appreciate you taking the time to watch, and I look forward to seeing you again next month. Make it a great day.